Good afternoon to all the panelists who are there today to discuss a very important topic, which is the program organized by NIIT CFO. And today we have a very esteemed panel of the industry leaders comprising of Supriya Sharma, who is Associate Director of Finance from Boston Scientific, Sanjay, CFO NIIT. We also have with us Hemant, Ruia, who is CFO, Regional CFO for DP World, and also Amit, Agarwal, CFO DC Shriram. So welcome you all for the panel discussions which we shall have today, and also good afternoon to all the attendees. So the topic, as we know today for the discussions, is a very interesting topic we all have been facing in the economy and the industries alike. Key to revival from survival in the time of crisis. I'm sure all of us in the industry, in the different whatever business industries we belong to or the business segment we are in, we all have faced this uncertainty, especially post-COVID, and the volatility which the economies and the business have felt alike, especially post-January 19. Especially this has been true with respect to the reasons of the cities and the business closures, supply chain disruptions, abnormal material price increase, depressed sentiments of the industry, and of course the suppressed consumer demand. One thing was also there, as we were coming out of the COVID as late as last 3 months and things were getting back to normal, we also have seen the onset of the Russia and Ukraine war and the havoc being played by this war on the creating further uncertainty into the business and the economies and the world alike. So this would be our theme and the topic for discussion today, how we in our industry in the respective work areas as the CFO are managing this crisis situation and managing the business run smoothly. So with me, I've already given the introduction of the entire panel today, and Sanjay is also there, as well as Hemant and Supriya. I can have your thoughts maybe from all the panelists, starting with Amit today, to be first. Amit, if you can give a thought. I mean, there has been a gray area of indecisiveness among the CFOs, especially post-COVID, when it comes to revival of the companies. You know, business side of the companies has always been enthusiastic and sometimes over-optimistic, and CFOs usually have a very conservative view. So what's taking in your mind, especially going through this last more than 30 months of uncertainty into the business? Is it survival or revival of the business, and how you have been managing within your work area?
Thanks, Rajnish, and good afternoon to everyone. Rajnish, what you just mentioned, I fully agree with you. And I'll see my thoughts on this are as under. See, one, I think in the last 30 months, if we break it down into a couple of periods. So one is when there was first wave of COVID, which was, let's say, from March to June, July. So that was a period when it was about survival, because it was complete uncertainty. You know, the manufacturing was shut down, and there were lockdowns and things like that. So that was a time when at least most of the businesses, including us, were looking how to ensure the survival, right? And how to manage our losses, how to manage our liquidity and things like that. Post that, I think for a long period of time after that, since let's say Q3 or Q2 of FY21 or FY20 actually, it was more about revival, because demand was picking up, there was pent-up demand and things like that, prices were stabilizing. And so I think it was about revival, working in a new environment. Digital was a big thing. So we had to transform to digital ways of doing things. And so that was about the revival phase, which continues. And I think one shift that has happened during this period is from unorganized segment, a lot of growth has moved to organized segment, right? So that has benefited a lot of companies. I think most of the organized players have got benefited, which is reflected in the numbers as well, both in FY20 and 21. I think today, if I look at what is taking my mind, one, as I said, is digital transformation. The other thing which is taking my mind, rather than survival or revival, is more about growth. Because supply chain disruptions are there to stay, right? Because what you rightly mentioned in the beginning, they are there to stay. It will take quite some time. So we have to manage. But then it's like today it becomes business as usual, have better planning, and you should be able to do it. But I think growth is one thing where, because we are seeing demand. Yes, and therefore, how do we manage growth given the fact that commodity prices are high, which means whatever projects you put up, your project costs have suddenly in last 1 year have gone up by about 25-30%. Secondly, the inflation today is high, right? But probably by the time your projects come up, whether the demand will sustain or not, we really don't know. So I think the way the project has to be evaluated, it has changed. So it's not just about immediate returns. One really has to take a little more long-term strategic view while implementing growth. So I think for me, it's more about digital and about growth. What's taking my mind today?
Very fair, very fair. So, Supriya, can we have your thoughts on this aspect?
Yeah, certainly. Thank you, Rajesh. And I totally agree with Amit that the times have changed. But I would like to mention over here that COVID is certainly an unprecedented event. We've had pandemics earlier, and we have seen that across the world, be it SARS or swine flu. But this is something which basically is just causing a lot of extensive disruption, not only on health, well-being, businesses across the globe. And I'm not very sure whether we have actually crossed that phase yet. Optimistically, I would hope that this tides over quickly. But still, I feel that there is still some part of it that we will need to manage. So, as rightly said, as a finance person, we definitely focus on shareholders' wealth, continuity of our business, profitability to our stakeholders, which is very important. But at the same time, I think the key point here to focus on is our employees and as an organization as a whole. So my thought would be that if as an organization, we can manage our talent pool in such a way, ensuring that all our employees have that job security and that sustained income that we have been able to provide to them for the past 2 years, I think that is a key point for all of us to keep a focus on. Definitely, if we keep that in our mind, because human resources is of course a very important and the biggest wealth of any organization, I feel the revival part of it will definitely fall in place. And very rightly said by Amit, digitization is the way to go, adopting to the new strategy, moving forward and changing our business plans to match with the times that are coming ahead. And obviously managing that risk and preparing for the contingency. So I feel a focus on all these things are important for us to take us forward. And as we have tied over these 2 years, I'm sure we can move forward with it. That's my thought.
Very fair, Supriya. I mean, you rightly said the employees' well-being and safety also takes priority over the business. Also, these days have to be taken care at the same time. Yeah, very rightly said. So, Sanjay, maybe if you could share your thoughts about the same, how you have your views.
Sure, Rajnish. I mean, as everyone has basically pointed out, this has been actually a VUCA world in any case, I think for centuries together now, or decades together at least. And however, I think what we have seen over the last 24, 30 months, it has been of, different proportions. And it is possibly, I would say, one of the biggest challenges and crises for the mankind as such, which is what I would say that, this is not an isolated event or event which is of economic dimensions only. It is for the, relation to the health, the well-being of people. And I think that is what has been the greatest threat. Economies and businesses and everyone has really got impacted initially. But I think as the human nature is that we basically respond back. We try and see how we can mitigate the situation and arrest the situation. And what we have seen is that the first priority for everyone, and I think for us also, had been the safety of the people and their well-being. And the business continuity was the other element which has been there, which had to be looked at. On top of that, I think it is the ways of working, as other panelists have also talked about, the digital transformation and how to deal with when you are constrained to work in an in-person kind of an environment. So that has really caused a lot of, I would say, initial hiccups. But I think what we have seen, and being in the industry, various sectors have had various impacts of different proportions. Some would have got impacted more, the others would have got little less. But I think every crisis also, as they say, has an opportunity, which should not be missed. And at least in our case, what we have been able to do is that in the first 6 months, I think what we have been able to create agile responses as well as the decisive actions. I think that has taken us to at least put our house in order first, keep our people safe, and then move on to basically saying that how we can tap on the opportunity. The digital transformation also has, in a way, I would say, has accelerated the pace of adoption, which would have taken maybe 5 more years to basically come to the terms where we have done even in the less than 6 months time. And that, I think, has provided an opportunity for us as a global talent development organization across, I would say, market segments or customer segments. So I see that it has been a phase of survival in the first 3 months or 6 months, moving on to revival. And now I think while the uncertainty prevails, we don't know what happens, whether the fourth wave come, the impact of the war, which is there. But I think right now we at least are in a frame of mind that we are more in an acceleration mode rather than a survival or a revival mode. Of course, there are many challenges which we'll discuss as we go along.
I mean, you very aptly said business has to have the mitigation measures now to manage this, business continuity. Otherwise, this VUCA world has become very uncertain for business sustainability. That's right. Hemant.
Yes,
Hemant?
Rajnish.
Can we have
Hi.
thoughts on the this point?
Yeah. Honestly, let me start with a quote by a famous Hindi poet who said, "Ruk jana mar jana hai." So effectively, we have, as a human race, we have demonstrated that we need to move on. And we faced the pandemic. We did what was right that time. We digitized, we became more agile, we took care of people. That was survival. Then the moment we kind of started coming to terms with it, learning the nuances of the pandemic and possibly getting our arms around it. And, after the first wave, we took 2 more waves. And we don't know how many are in the offing, which are yet to come. But if you see the trajectory, it's been reasonably looking northwards. And so I do see that the survival mode is over. A lot of companies who have digitized, who have become more agile, have moved on. And now they're, as Sanjay said, on the acceleration mode. And those who have not yet reached that state, the critical mass, there's no end state, but there's a critical mass of learning to come to terms with the digitization and agility and learning the new ways of business. What has come to the fore is the fact that the human ability to deal with people has become very critical, because with the new agility and the digitized environment, the skills which people needed or now need more so to move on in to accelerate your environment has become critical. Similarly, these days, you see a lot of attrition. Okay, that's another thing which you need to grapple during an acceleration phase. And third, which I believe is have all companies or have all individuals, companies are only a collection of individuals, I would put it this way. Have we learned our lessons which the pandemic has taught us? If we kind of focus on these three things, which is basically digitization and agility, people and skills, and the lessons, I think we should be looking at acceleration rather than just survival or revival.
Thanks.
Yeah.
Thanks, Hemant. I mean, very aptly you said the business has learned to be more agile. The business was already agile. They were already catching up with the economy, has become more agile to sustain the growth and manage the growth. And also we have become more empathetic attitude towards the employees, especially post-COVID. All the companies have been managing this pretty well. Thanks. Hemant, I have a next also point where I need your thoughts is, also I mentioned the start of the discussion is as we were coming out of the COVID and business was or the world was becoming normal and had learned to live with the COVID. Again, the Russia and the Ukraine war has posed different challenges with respect to supply chain disruptions, inflations, and these challenges definitely have some impact on the India and our business connected with these countries as a whole. So, what are the implications in your view we have of this war in India and how the businesses have learned to manage this crisis, especially with respect to your industry?
Thanks, Rajnish. Let me share with you two data points which have come out in the last few days, maybe at best a week. Both are interrelated. Inflation. US, the latest says 8.5%, the highest in 40 years. Okay. India, the latest one says 6.95%. Okay. And when you are already at 6.95% and the trajectory looks northwards, RBI, even though RBI has said that, my comfort range is 2 to 6%, and they estimate the inflation to be at 5.7% as per the latest monetary policy. Are we heading there? Are we on track to hit 5.7%? Or if US is at 8.5%, the next 6 increases which the Fed has forecasted back to back, will that be able to tame inflation? And because this was a trickle down effect of the war as of now. My guess is the full impact of the war is yet to be seen, because the oil prices are over $100 a barrel, and though you're seeing a lot of nice messaging that peace talks are on and all that, ultimately how long the oil stays above $100 a barrel will have an impact on all countries across the globe. The Fed increase in rates will impact countries across the globe. And if we come specifically to our own country, if they do it far more aggressively than us, the interest rate differential will widen dramatically, put a severe pressure on the rupee, and consequently, one can arguably argue that exports will benefit, but then we are a net importer. There's a trade deficit. We are currently at 200 billion trade deficit. Now, if you keep that in mind and go to another data point, that you are at 200 billion net deficit with, and please mark my words when I said it'll have an impact on the other economies of the world.
Yeah.
We have been roughly estimated to export 400 billion in FY22. Now, if there's an impact on the economies of the world, our exports will look a little soft. Plus, the 600 billion of imports that we did was not at $100 a barrel. So exports going south, imports going north. The 200 billion is, I mean, is anyone's guess. Will it be 300? What will it be? So the trade deficit basically widens. That'll put more pressure on the government funding on the infrastructure, which we talked a lot when the budget was presented. We are talking of 35% and stuff like that. Plus, it'll have impact on the interest rates. And as I think it was Amit who mentioned, the people who, or the companies who are net borrowers, and they look at projects, basis borrowed money, and their interest rates are going to go very high. And if your gross margins ain't so good, your IRRs may turn a little soft. So will you be in the money this after the rate increase? And something we also need to keep in mind that we have the Lanka crisis, which is just next door. A large part of our shipments were routed through Lanka. With the Lanka crisis, they'll not be routed, they'll be skipped calls by the vessels. And so there's a positive and negative. Vessels may call directly to the Indian ports, and some may not. So there will be supply chain disruptions again. So net, I'm seeing a higher deficit for us. Interest rates going northwards, supply chain disruptions. We don't know how long the war will last and where the barrel will sit at. And plus, two more things that I'll just like to highlight. Private consumption is still not at pre-COVID levels. So with all this rate increases, we don't know where it'll be. And something which we mentioned, that we don't know how many waves will hit us and what will be the severity. If it's like wave 3, possibly the world has learned to live with it. And I hope it is that when the next waves, if at all they hit. And if they are a little more severe, then we're looking at a little more softening in the economy.
Fair enough. I mean, very insightful views, Hemant. Makes us a little bit more cautious, to have a cautious approach, and wait and watch approach also. How the war takes shape, everything depends on this. If it ends early, then also the world is a better world to live, and we can manage, the economies will be better managed by the governments. Also, business can also then correlate and do better. Thank you.
Sure.
Amit, I need your thoughts on, especially DCM Shriram is in different business verticals and very widely spread, B2B and B2C business. So you must have faced different challenges in the working capital management in the business scenario, especially post-COVID. So how did you manage this, considering the way the uncertainty was hovering on the economy and the businesses? If you can share your thoughts.
Yeah, thanks, Rajnish. See, the fact is that given COVID, given the supply chain disruptions resulting from COVID and now from the Ukraine war, the working capital cycle has moved up. Now, the reason, as was mentioned earlier also by some members, panelists, that supply chain disruptions actually are leading to us having a higher inventory levels, of especially about raw materials. So let's say something critical raw materials, or let's say which we were storing for about a month, probably now we are storing for about 2 months, to ensure that there is continuity of operations, right? So which means a higher working capital cycle. Similarly, the disruptions are also leading to higher finished goods, because again, shipments can get delayed. Also, there is demand volatility. So in a particular month, you might have a good demand, but in a particular month, you might have a lower demand. Now, and there are various reasons for that. I'm not delving into that, but I'm just mentioning that there is demand volatility as well. which is also resulting into higher inventory. And therefore receivables also are a little difficult to manage. But I think what is important is, given this scenario where your working capital cycle is up, you need to see how do you reduce risks on the working capital cycle, right? So one is you can reduce your deployment by increasing your payables, right? So you renegotiate your contracts with vendors, the payment terms with vendors, because now you're buying in bulk, you can ask more discounts. On receivable side, again, you probably need to look at what customers you're dealing with, how is their financial strength in the given scenario. Look at credit insurance, incentivize early payments. Again, you can probably do some non-recourse financing, right? So I think those are the kind of steps one needs to take to reduce the risk of a higher working capital. I won't say it is significantly higher, but yes, it is higher. Also, another point is that today funding higher working capital also is not that big an issue, given abundant liquidity in the system. But yes, it's available to, probably I would say healthy balance sheets or good corporates, but then funding is not that big an issue. So I think it can be managed, but just that one has to be a little more focused on how the working capital is going up and what is leading to that working capital. It is critical, or there are some lapses happening, so one has to tighten it up. So I think that's how I look at it.
Very fair thoughts. I mean, as you rightly said, it all depends how you bill and could you manage your receivable, payables, and the inventory levels. If inventory levels are right, it's a less involvement of the working capital, and you can turn around your money better and faster. Definitely. Thanks. Sanjay, need your thoughts on, especially, post-COVID, the employees' challenges. There have been many challenges related to the employees, and one of the very important and the key challenge all of us in the industry have faced across industries is how the organization and the company's industry have managed the skill gap, which has come especially due to COVID and the way digital transformation is happening during, especially post-pandemic. So, are you able to manage this skill gap within your organization and the industry well, or there have been different skill set requirements, or the trainings are being ramped up for the employees?
Yeah, Rajnish, there are two perspectives or dimensions I would like to bring about. One is an important dimension of how the environment has been playing. The accelerated digital, transformation which we have seen across, I would say, businesses, sectors, has really caused demand supply gap. That is one. Second is essentially that with the inflation generally and the demand supply gap, there has been a wage cost inflation, which has also happened in this sector, I would say. Globally, we have seen, a phenomena of great resignation. People who went, back to home out of work, never came back. A large proportion of them have never come back. I have an example recently in one of our verticals in an airlines industry. There were large, contingent of almost about 20,000 where they are put on furloughs essentially. And so the government paid the bill for 50% and they didn't have to do it. But when the time came to bring them back, a large part, I would say almost 50 to 60%, didn't want to come back. And there has been I would say, a new hiring has to be done. And for that, there has to be a training requirement, which needs to be fulfilled, or upskilling, or I would say onboarding, which is there. So it is not only that there has been, because digital transformation is happening, there has been a higher adoption and the space at which it has been moving, there has been a demand supply gap. But I think where people who were already skilled are not coming back to the jobs, and hence there is a wider gap which has got created. Now, this challenge is, I would say all across. It is not, I would say, our business. Our business is a small part and in fact enables that digital transformation skill gap to be fulfilled. At the same point in time, we have seen across the technology companies, the global system integrator, the global capability centers, the organizations across sectors, whether it is technology, fintech, health tech, edutech, IT services, banks, airlines, everywhere. I think the kind of gap which is there is humongous. So what we see is basically that we have more of an opportunity at this point in time from our perspective, rather than, I would say, a challenge. However, I would not like to downplay the challenge also, because see, while we enable, we also need people. Now, what you can do essentially is, in the steps which we have taken during this pandemic phase and the current opportunity phases, that we have basically been having already a lot of technology investments in terms of platforms, in terms of basically availability of or access of training through a digital mode rather than essentially the in-person mode. So to that extent, we are able to kind of use our technology modes to deliver training. And in fact, in the last 2 years, in-person training has been almost zero, I would say. And 100% has been a digital training, which we believe has one way or a solution basically to look at. Second, of course, is basically that this challenge will remain. The costs are going up, but you have to focus as another, I would say, element is the productivity, which we have also seen over time that the productivity has increased when there has been a work from home. Whichever way we look at it, it is not going to be the same world or the same way of working which we used to have. It is going to be at least hybrid, if not, larger part of it on a digital mode. So this opportunity will continue to be there in one sense. The challenges are going to be there, but I think there has been this productivity element, which everyone is focusing on to try and see that how you are able to meet this skills challenge.
Thanks, Sanjay.
We have multiple modes, I would say. We have multiple modes by which we have tried to help the larger industry in bringing about, the offerings like talent as a pipeline, or talent pipeline as a service kind of a stuff, which we have been providing. We deal with the global, I would say, Fortune 500 corporations, and top of the vertical of these organizations who outsource training needs for their internal needs as well as for their partners, essentially. So all this has basically helped to be met through, I would say, usage of platforms, the digital tools and technology.
Thanks, Sanjay. For your key inputs, as you rightly said, going forward, the world has learned to live with the hybrid mode of working. Of course, this has increased the productivity. Certain manufacturing maybe works in a different way. The service industry works in a different way. But nevertheless, hybrid is going to stay for the future. Also, the digital platforms have enabled a lot of trainings and upskilling of the employees also, which will also go a long way in meeting the demand gap and the skill gap which we were having in the employees. Thank you. Supriya, connected to this question or this topic, I would say is, there has been a skill gap challenges post-COVID due to the digital transformation. The business has also witnessed increased cost and complexities also in the risk management. It could be compliance risk or the cyber risk. How you have been managing this in your organization?
Thanks, Rajesh. Yes, very apt question and quite linked with what we were discussing earlier, the skill gap. That is one area which we are all trying to come to terms with and trying to get assessment of our critical talent pool and build on those talent management strategies as well as the upskilling strategy. So you rightly said COVID brought us a lot of challenges, and I would say not only challenges, we can look at them as the opportunities, ways of learning. And there definitely is a lot of dependency on technology, the online interconnectivity. And with that, of course, there is an increased risk of cyber threats and attacks, which we have to ensure that we manage effectively. I'm sure we would have heard this saying that now data is the new gold, and as it goes, it becomes more important to manage your data, to manage your IT infrastructure in a better way, and focus on IT strategy, management, training, and upskilling of your resources to become more tech savvy. So I think a lot of companies are, since they're allowing them to work from remote locations and from home, they have invested a lot on the IT infrastructure, and rightly so. And unfortunately, in these circumstances, we become prone to more and more of, attacks or instances where we are seeing some companies having some phishing attacks on their email IDs, on their Outlook, some compromising on the financial information, and in fact, even some emails wherein there are some emails asking for ransom or cryptocurrencies I've heard around. So earlier we were seeing this trend that cyber attacks were there, but those were more of a nuisance factor kind of thing. They are now becoming more critical and more important to us also, because our bread and butter is, connected to that in a better way and in a more, critical way. So I think most organizations, and even our organization, we are taking a more proactive approach of managing these. And the policies and measures that we are putting across are to ensure that we manage them timely rather than, responding to them later on. We proactively take care of that, be agile, and invest in our infrastructure. One trend that we are seeing, and it is like the policy of no trust policy, the no trust IT policy, which we have seen across organizations, wherein every source, be it internal or external, is thoroughly verified for the IT safeguards that we need to put in place. It would seem similar to the zero-based budgeting that we finance people are used to, hearing about and talking about. So I think IT has also come up with this concept, which is very welcome, to look at each and every aspect to ensure that we avoid these cyber attacks and these compliance risks. So I would say it is important to have these policies and procedures in place, but more so important to educate our employees that, these are the policies, these are the safeguards that you have to take care of. There's no point in having a lot of methods or policies and procedures put out without people understanding that and taking care of that. So I think IT training has also become very important, and we can manage that over the remote platform that we have. Further safeguards, I feel that which we can take as an organization, and these are quick wins, like ensuring we have a secure VPN connectivity, ensuring we monitor IT systems rightly and in a periodic way, ensuring we have the firewalls in place, and access rights are rightly given to the people who need it. So all these aspects are important, and more organizations are investing into it. I would say as important as these IT checks are, also to have that built into our control mechanism. So not only do we have to take care of our financial reporting, but also ensure that our ERP systems have these controls and balances put in place. The last thing I would like to say is it's also important that we start building these controls into our business continuity plans. And why I say so is because this is going to be a part of life or way of work for all of us going forward. So as soon as we can integrate that into our VCP planning, the better for us. So that's what I wanted to add on this. Any thoughts, any suggestions?
No, I mean, really, thanks for the inputs. And as you said, we need to have right IT control mechanisms in place now, considering the kind of cyber attacks all the companies have been facing. I mean, all the companies have had phishing and cyber attacks these days. We have to be very, very cautious, have IT control mechanisms in place. And also, as you said, no trust IT policy also helps us in taking, especially the finance people relate to the zero-based budgeting. I mean, really different. I could also correlate the time we studied zero-based budgeting and we also practice, but then we are not able to relate it to the IT, but good to know. Thank you.
Thank you.
So Supriya, another point, I mean, continuing from here onwards, the RBI last week already announced in his statement that the repo rate shall remain unchanged, and they decided to have a accommodative stance, which means they were choosing growth over the inflation. But Hemant also mentioned just now in the sometime back that April inflation is close to 7%. It's an all-time 17-month high now, 7%. We also hear at the same time that since RBI has not increased the repo rate, there are some rumors that 25 BPS rate hike is expected in the next MPC meeting in June. And of course, we also know the crude is hovering around average about $100 a barrel. So your thoughts about this, how the government stance is going to change going forward, inflation vis-a-vis the repo rate?
Yes, definitely. This is quite a popular question these days and very well debated as well. We've heard Hemant and I really like his thoughts around it. I'd like to answer this from my perspective. So I would like to take you back to the time when the pandemic first started in 2020. And we can say that the economic activities actually came to quite a standstill at that time. And I feel the government and the regulators did their part to take care of the MSMEs, the self-employed and the businesses. I think the loans and the credit facilities that we had given to them at that time really helped to revive the growth quite a lot, the demand, the supply in the economy. And I was reading somewhere that almost 15 to 20% of MSMEs would not have been able to sustain this crisis if not for that timely aid that we had given. And so coming back to the scenario now, we were just grappling with the growth coming up and also third COVID wave. On top of that, we now have the recent geopolitical tensions, the complexity that we can see on supply chain, and as you rightly mentioned, the crude oil price inflation. So all these things, I think we are still in a weak phase in terms of the growth of the economy, which is probably now 7.2% as against the projected rate of 7.8. So, and of course, as Hemant mentioned, the inflation is also edging up the tolerance band. So I think the regulators at this point of time and the MCP had a real tough stance to take, a very difficult decision to take. And against this backdrop, I feel when they voted for sustaining growth unanimously to look at reviving growth, I feel that was a very positive instance. I know the repo rate hasn't changed. It is still 4%, but definitely certain other measures I think have been put in place, like the standing deposit facility, wherein they can slowly tap the liquidity from the market and from the country. So this was something which I think we also used during our demonetization, and it helped to tame the inflation. So I would say it's still a tightrope and dependent on lots of external factors. We have to see how this decision goes. And I'm sure in the next committee meeting, probably there will be more clarity, and which way we need to go, we can probably understand from there. But at this point of time, I think this was a cautious decision, and I feel quite thought through. However, we need to see where it lands up at. Yeah.
Thanks for your views. Amit, can we have your thoughts also on the same point?
Yeah, sure.
Yeah,
Thanks, Rajnish.
Vis-a-vis growth.
I think interesting take by Supriya, but I'll give a little different perspective. We actually rightly said it's a well debated topic. So, if you read what RBI statement mentioned, it said that remain accommodative while focusing on withdrawal of accommodation to ensure that inflation remains within target going forward while supporting growth. Very complicated statement. But I think what this statement suggested was that they are moving towards normalcy. We're clearly saying that while looking at withdrawal of accommodation. And as Supriya mentioned, that they have brought in SDF, the standing facility. Now that's at 3.75. And that is also overnight facility. It does not require any collateral. So actually that will be used. So effectively the rates have already gone up From 3.35, we are at 3.75 for reverse repo. And for repo, we are at 4. Now, if you see how the interest rates have moved, if you see long-term interest rates over the last 6 months have already inched up by about 1%. And if you see short-term rates are already up by about 50 basis points. And in last 3 days, long-term rates have actually gone up by about 30 to 35 basis points. So I think the transition to normalcy has started. Inflation already is at around 7%. So my sense is RBI has already acted and probably it might act further. But the only thing which even Supriya mentioned that it's going to be a tight rope, because see, inflation is supply-led, it's not demand-led. So in a supply-led inflation, monetary policy can do only limited. And if they actually tighten the interest rate further, it can only damage the supply side rather than benefit. I mean, obviously, there are much bigger economists sitting there. So, I would not like to comment more. But that's the limited knowledge that I have. It's a supply-led inflation. So it's a difficult thing. But I think they've already started acting by increasing the rates. So it's not accommodative anymore. Accommodative.
And I mean, good to know two contrasting views from Supriya and you. So wait for the next June meeting of RBI and let's see what MPC does. Hopefully, they have to now manage inflation also besides the growth. So let's wait for another 2 months to see what happens. Thank you.
See, the industry point of view on this, if I may just add, has been that, while there has been this statement, or I would say, the trigger to arrest whatever needs to be arrested, because they have been ignoring the inflation for the growth for long. At the same point in time, I think they do not have the elbow room to go beyond couple of quarters to essentially increase the rates, and then again have to look at or manage the triology, and hence look at growth again, given the current environment. So it's at a tightrope walk, as has been mentioned.
Yeah, I agree, Sanjay. We'll have to walk on the tightrope and wait for June to see what really happens and unfolds.
Correct.
So given, the next point, which is also very relevant for us, is we have already seen 3 waves of COVID. Fortunately for all of us in India, third wave was pretty, not very lethal, and we didn't have many casualties. Neither were business closed down, the work and the business, everything continued pretty normally. But we are also seeing a lot of speculation of the 4th wave now coming or might be hitting us somewhere around June, possibly July. Nobody can really pinpoint the exact month, but definitely experts are debating on the issue. So definitely, I know the business already ahead of this forecast of the 4th wave must be planning with the different scenarios to manage the risk, global risk, especially if the COVID is also 4th wave weapon, also with the onset of the war between Russia and Ukraine, which is perhaps looks like will continue until June, is not going to be ending soon. So how are you going to manage this risk? Hemant, if you can give your thoughts onto this.
Sure, Rajnish, thanks. As you said, waves. It's like sitting on the beach and looking at them. They'll come and go. So, and that's how, honestly, I see it. And with each wave, you have a learning. Even when you sit on the beach, a wave comes, some touch you, some don't touch you. Some come and splash water on you. And sometimes you don't know if the wave is actually a tsunami. But it's still coming and coming one after another. Similarly, I think, are we done with the COVID waves? And this is me as my opinion. I don't think so. We are done with the waves. They will come and go, because the fundamental problem that there's a virus, it's mutating, and it gets transmitted easily. What will stop it, or what will stop the severity, is when the whole world has had a vaccination. At least 2 doses of vaccination have been done. Now that's some time away. So I don't see the wave stopping. However, I do see the severity coming down because as time progresses, more and more people are getting either vaccinated or natural immunization is happening. And so the severity will come down. Now, if you kind of dispassionately walk away from that, so we have had a wave, the first lockdown, first wave. We had no clue. We were kind of, searching in the dark. The good news was that it did not impact us as badly as possibly the next round. So second wave was reasonably damaging. I mean, it came virtually to everyone's doors. Somehow or the other, we or our extended families were always affected by the second wave. Third wave came, it went, but it was not as bad as the second one. So you have had a wave where we were kind of groping in the dark. You had a wave where it really impacted us, and then you have had a wave where it touched us, the wave, whether the water wave or the COVID wave, it touched us and it went. Now, if companies were proactive, they already have SOPs in place. If companies were reactive, they have learnings. All they need to do is to document it. Because at the end of the day, it's the SATA market. We can keep speculating and we can have endless panel discussions as to whether the fourth wave or the fifth wave will come or not. What has to happen will happen. I think what we need to do is how can we meander around this so-called high wave, expected high wave or expected low wave. And for that, we have a lot of learnings in our kitty, whether we were proactive or reactive. And life has to move on. And if you see, this is what the government's also forcing you. So UK, there are many countries who have done away with all protocols. Even within our country, there are states like Maharashtra, Haryana, they have done away with mandatory masks. You can put it on if you wish. If you don't, so be it. So I think there's a fatigue setting in of the pandemic also. So people will want to deal with it rather than sit by the wayside. So irrespective of the waves, I think people know, or at least have reasonable, they're not as novices as they were in the first wave. They have a history of a severe wave and a touch wave, if I may. My opinion, waves will happen because the logic being that not everyone is vaccinated, but if they don't come, well, no one is complaining. But we'll all have to learn to live with it and move on. And the other point is, and which I think I had alluded to in the first question, have we learned our lessons? Somewhere I feel some have and some have not. Now, we can again have a lot of statistics around this, but what people are saying is revenge travel. Is it really revenge travel, or is it? I mean, those are just softer sides, which will, over a period of time, more data will tell us whether we are on the right path. Have we learned our lessons or not?
You're right, Sanjay. I mean, the businesses and the governments have learned to live with this COVID different waves, and of course, it is expected that the business would also prepare themselves with the necessary SOPs, to face all these uncertainties. We are here to learn to live with this. It goes without saying. Thanks, Sanjay. May we have your thoughts on this?
So I think I agree with Hemant on many perspectives, especially the perspective of what have we learned. because it's not something which has come first time. We did see it 2 years back or 30 months back for the first time. We have all learned how to deal with it. And we can't, it is all speculative. And we can't also, wish away that there is not going to be any wave again, the way the environment is. So I think it is whatever we have learned, whatever precautions we had, or SOPs we had created, can we continue to basically implement in a disciplined manner. We also have the onus on each individual, whether it is us as such in the family or in the corporate family we are working for. So each one has to take that onus also. So these are, I think, from a self-care or precautionary measures which are there. From the business perspective, I think, we are little better, I would say, prepared than what we were in the initial waves, right? So to that extent, these learnings will help. At the same point in time, I think, at least I can talk about my organization, the efficiencies and productivity improvement through technology, as I mentioned, is what is basically going to be changing the handling of situations and the way of working which we have had. So that is a very important thing. On the other side, I think there is another human dimension, which is the psychological impact on people. How is it playing or panning out? Which is what I think is very important, that you continuously communicate, engage with your people, and keep them abreast of both, what are the opportunities and what are the safeguards which needs to be, taken care of. So I think that, of course, is a very important element. And linked to this, I think fourth wave, when we are talking about inflation and people and talent, I think also is the culture and ethos of the organization, which, of course, depending on each organization, how it sees it. But I think we are very strong on that. And we have this communication exercises or engagement exercises, which basically bring about the closeness to the organization. So I think that's how we see seeing through these challenges.
I mean, you rightly said, Sanjay. I mean, also Hemant also mentioned, we all seem to be better prepared now in our industries, in our organizations, companies. Governments are also better prepared, having gone through all the 3 waves of better prepared for food wave. Also, the countries and mostly vaccinated now. So we all know how to manage the business better, facing all these uncertainties. So I think that brings us to the end of the session today. And though we have one question, I'll just try to open the question before we close this session. And let me see whom these questions are addressed. So one of the questions from the participants is, what is the future of digitization of the business and industries we had during COVID? And now once everything has started opening up. I think this question, Sanjay, you already addressed while we spoke on the digital transformation and the digitalization.
Yeah, I saw that. So built it into my narrative.
It was in the narrative. I also see. I mean,
yeah.
The other one question we have from the participant is, the current acceleration is somewhere creating a fear in the employees regarding their standard of living. How do you see this? Current acceleration is somewhere acceleration, or is this inflation? I'm spreading fear, or maybe acceleration of COVID. Maybe Supriya, if you can take this question and give your thoughts.
I don't know whether it is linked to inflation or to attrition.
I was so confused, but let's address both.
Okay. Yes, of course, inflation is causing a worry, is quite worrisome for all of us. And as we rightly said, we are all keeping a watch on what happens. Being optimistic, we just hope that, things settle down on the Ukraine and Russia war front. We do see some stability over there, and we are able to manage growth the way that, we are predicting. So that's something which we are keeping our fingers crossed on. I don't think we can do much around it, but still but focus on what we are doing and doing that well. So we can aid that. If I talk about attrition, and I think we have already addressed that question, the great resignation someone mentioned. I think it is just a bubble, probably. That's my thought. People are seeing opportunities across different organizations in the short term, but they do need to understand that being with an organization is not only about the amount of money or the amount of benefits that you get, monetary benefits. As rightly mentioned by Sanjay, it is the culture, it is the learning, it is the overall growth in your professional career, or what you see for yourself in the long term is something which is important. So if the question is around attrition and the fear of leaving, I think it's better to weigh these things and see the pros and cons of both scenarios before making any decisions on that front. That's what I would like to say.
Sure. Thank you. So that brings us to the end of the session. We are right on time, 4 o'clock. I would like to thank all the panelists, Amit, Hemant, Sanjay, Supriya, for very insightful discussions. We had all facets of business, economy, how it is impacting in our industry or economy in general, or in the other industries where we are not directly connected, and are we going to face all these challenges, especially have also faced in the past in the COVID, and going forward, how are we going to address these challenges as a finance leaders. Also would like to thank ET CFO for bringing all of us together and for a very insightful discussions. Thank you.
Thank you, Rajnish, for carrying through and managing this so seamlessly.
Thank you.
And thank you, my co-panelists,
Thank
you.
for your perspectives.
Bye.
Very insightful.